You angry? You angry? Oh, man. Oh, you're freaking just a little gymnast. You goofball. Oh, man. Figured you guys would want to see Titan this fine evening after a little bit of a red day. But he's in a mood right now, so we're gonna let him be. What is up, everybody? I'm gonna trades. We freaking talk fast and don't skip class. I like to post by saying I'm gonna find you advisor expert. So take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gruely gang, we had a red day here on AMC as I anticipated, and I just wanted to be able to mentally prepare you for that with yesterday's video, which is why I came out and I talked about this Fibonacci retracement zone. Now I'm gonna walk you through essentially what that means in terms of technical analysis, so that you can predict this sort of stuff coming in through the future. But if you're prepared for that mentally and psychologically, you know what the game is, right? It's part of the microscopic sort of what I would call a retracement on the way to ultimately retesting that $50 mark down the road here. So we're gonna go over a couple different things. We're gonna go over the Ortex data because we did see an increase in short interest today, despite the fact that we have a T2 settlement system, meaning that any sort of return shares take 2 days to settle, and we had a huge push to the upside 2 days ago. I'm gonna get into what I think that means, but we're gonna go over that. We're gonna go over the short sale volume percentage, which gives us an idea of what sort of activity we're seeing in terms of volume on the stock. That way we can analyze how the apes are fending on a day-to-day basis, and then finish it off with a technical analysis and whatever trend we are seeing here, so we can have some sort of idea what is to come on Friday and the following week, and you can prepare for that any way that you want to. As always, this investment is your own financial responsibility, your own financial decision. I am just here to give one humble dude's opinion on the day-to-day price action. The rest is up to you. So without further ado, let's get into some gravy, baby. We're gonna start off here with Ortex. So Ortex, you see that we have 17.04% current short interest of free float, which is a net increase of just a little bit, about 0.27%. You saw that 286,000 shares were net positive borrowed today, and despite that, we did see, well, I shouldn't say despite that because we were fucking red, but that is, we did have a red day today, right? 8.3% red. And I'm gonna get into this more as we get into the short sale volume percentage, but we did see a huge uptick in terms of shorting yesterday, 59%, and I would not be surprised in the least bit if you end up seeing that today when that data comes out tomorrow. You have a pretty decent amount of short selling. We also saw the cost of borrow remaining pretty decently high, that annualized interest rate, which is another confirmation that there is a little more pressure on short positions than there was previously. Utilization sitting about the same, 90.95%. Nothing new to note there, but the thing to watch for is the overall trend. So I want to show you the trend of utilization. I want to show you the trend of estimated short interest, and I also want to show you the trend of the average days on loan for any sort of short position, because you're seeing some pretty interesting data here with all three of these things. So the estimated short interest of free float went up a little bit here, about 17% or so, while the utilization has gone up as well. It went up to 90.95% at its peak here intraday, while the short interest did pull back here a little bit. Now, the reasoning for that is because the shares on loan versus the actual short interest is not always the same. You can have a share out on loan while it's not actually a shorted share. It's just a lent share that hasn't been sold into the market yet. So that discrepancy here, typically, when you see this variability, or it bounces back and forth, you're going to find some middle ground eventually. So what I would find in the next week or 2 weeks when the next FINRA report comes out is that these diverge in the middle a little bit. So maybe the utilization goes down just a hair. It'd be like 90%, 91, 89, while the short interest goes up a little bit. And that divergence point, right where they meet in the middle, is typically more accurate. So the larger the gap between the free float and the actual short interest, that's more indicative, essentially, of probably a discrepancy in terms of data. So how are we sitting right now? 105 million total shares on loan compared to 87 million. Maybe it's off by about 1 million or 2 million, but just keep in mind this is 85% of the exchange reported data. The most interesting piece, though, is this. The average days on loan is continuing to go up, meaning that older short positions are the ones still holding, diamond balling over in the crap out of their losing position, while the new shorts are exiting. That's why the average days on loan is continuing to go up, even though you have had the past couple of days some of the shorts potentially cover or potentially add to the position. But more likely than not, these guys are holding their stock price somewhere near this $40, $50 range, which is really dang close to where we're currently trading, and that should make you excited because that means there's pressure on the short positions. Now, I've seen this floating around Twitter a little bit. It was about the cost to borrow, the annualized interest rate going up 500% from the minimum of 1% up to 5%, and it's no coincidence that there's just more risk associated with an overall short position right now, which is why you're going to see that cost of borrow go up. That is basically influenced by a few different things. Utilization, what's the availability, supply and demand, basic economics, right? And the risk to any sort of lender and or short seller. And as that risk goes up, you're going to see that annualized interest rate go up because it is incentivizing people not to hold that position for a prolonged period of time. So that's what you got rocking on the Ortex data. Nothing crazy notable to mention. Other than that, cost of borrow remaining decently high for that maximum value for about the fourth consecutive day, which is again another confirmation that we're walking in the right direction in terms of the actual stock price and momentum getting behind the stock. You also see that 59% of the overall market volume yesterday was shorted volume. And you can see that in the overall stock price. I talked about this bear trap setup in which I thought you were going to see a retracement down to that $40 to $42 range. And you can see where there was a lot of pressure by the shorts to try and push the price back down. It is absolutely no coincidence that you had this double top bear trap setup at 48.30 and it rejected immediately just like that, as well as having that high amount of shorted volume going into the stock. I mean, 88 million shares short just based on whatever information was made available to this website, right? It could be more than that, not taking into consideration any puts, any sort of naked short selling, any failure to delivers, right? You can see where they made that happen. And I'm not going to be surprised in the least bit to see this exact same thing today in terms of price action. Now, what ended up happening today with the technical analysis, right? I was decently close. I missed the actual bottom of this sell-off by, what is it, freaking 40 cents or so. I thought it dropped down about 40.79 at maximum value, dropped down about 40.29. And what you can see here is that it tested out this retracement zone immediately within the first few hours of market open, and then it tried to bounce back up. It rejected 3 times on hourly candles, and when it sold off hard, and that's because it's a retracement zone. It's a technical point in which you can see some levels of support or resistance on both sides of the play. So what ended up happening here is you have that break underneath that retracement zone back into that box, as well as likely some unhedging taking place on the options market. So I'm going to look at the puts first because hedging goes on both sides of the coin, right? Puts are considered short interest in my mind because they move the price and the volatility of the stock. You've got a lot of freaking activity on the put side of things. Now, there's not a lot of puts from $41 up to $54. So most of the hedging probably didn't take place here. Most of it probably took place on the call side of things. Between $40 and $50, you've got a pretty decent amount of call options that could have got unhedged for, depending on where that meet in the middle point is in terms of premium collected by the market makers and how much profit is actually being put out to the investors. Once that the market makers come to the divergence point in which they're going to come out net positive, they don't have to worry about losing money on that contract. They're going to unhedge the position. They're going to sell that stock for that underlying contract back into the market. And you can see that likely played a factor in this overall stock movement here today, because this move from $42 down to $40. Well, if you look at the call options chain, you can see there was a pretty decent amount of calls here between $46 and $45 down to $41. So that's probably a piece of the puzzle. Now, I think the most important trend that I want to be able to mention is that forward test trend once again, because we came just shy of that $50 mark. You can see twice now that it's rejected off of about $48.30. Now, on top of that, we have 2 tests of that $48.30 level, similar to the 4 tests that we had on $37.50 before it broke up to $48. You also have an upside level of support. And to find any level of support or resistance, all that you're trying to do is connect dots, right? So we have dots here, 1 dot, 2 dot, 3 dot, 4 dot. You get the point, right? So this is going to act as a level of support if and when it drops down to below $40. Do I think it's going to happen? I think you're more likely to see it hang in that $40 range, but it's a possibility, right? You have to be mentally prepared for that as it does come. You have another level of support, probably not quite as strong, but it is there nonetheless. Touching these 3 dots, I always look for at least 3 touch points to signify respective level of support or resistance right here at about $40.37. Now, in yesterday's video, I said what I'm watching for is the test of this Fibonacci retracement zone followed by a strong bounce back to the upside. And I do think that's a possibility, right? So I'm going to give out both possibilities that I think are going to happen here within the next 1 or 2 trading days. I think the bullish case, right? You're going to see a bounce off of this Fibonacci retracement zone, off this upside level of support, back into that mid 40s range. Or B, you're going to see a break underneath this upside level of support and a test of that $40 range, because we're already pretty close to it, $40.31 right now. You could see a false break underneath that $40 range and push back to the upside. So there is a pretty solid trend here, guys. I mean, the 15 MA is crossed over the 200 EMA. The volume is fucking surging. I mean, we've had monstrous volume over the last 3 days. It was cut pretty decently low today, 109 million, but that's a sign on a red day that people aren't selling the stock, right? When you have a lot of freaking volume, going in on an 8% red day, you know what's happening. People are selling the stock. But when you have 100 million volume compared to 208 million volume the previous day, you can see the imbalance here. And you can also see that when you look at the overall order flow. There's really not a large discrepancy in terms of dollars coming in versus dollars coming out. $990 million came in, $1 billion came out. That's a difference of $10 million. That's not worth freaking 8%. So you guys get the point, right? You know the game. If you've been watching the stock for more than a single day, you know what this freaking this buy and hold diamond ball ovary trade is about. It's about speaking out against the things that piss you off. So that's what I've got for this video. This is what the things that I'm watching for: bullish case, bearish case for the microscopic. I am still bullish on this in the microscopic as well as the macroscopic. Obviously, I think within the next 1 or 2 weeks, you are going to see that $50 test and break. It's just a matter of waiting out. So that's what I've got for you. Catch you on the next one. Much love, light taps always, and peace.